Can Robinhood make you rich? The short answer to that is yes, if you follow a certain strategy. And in this video, I'm going to show you exactly how you can invest in stocks to build your wealth over time and eventually become a rich Robinhood investor. Now guys, if you're a Robinhood investor, drop a like down below, hit that like button, smash that like button, and share this video with a friend, because I know a ton of you that use Robinhood have friends that also do it. So share this with them so that they can also benefit from this and potentially become rich as well. And what I'm going to do as an added bonus is at the end of this video, I'm actually going to show you that even with picking a common stock, you can actually come out very rich in the stock market. So don't miss that. Stick around for the whole video, guys. You're going to learn a ton from this video. But either way, to get rich using Robinhood, there's really 3 simple steps that I follow. Number 1, invest in blue chip companies with a proven track record and long dividend growth history. So Robinhood is a great platform because it gives you the flexibility to invest in individual businesses, individual stocks, without having to worry about commission charges. Commissions are typically one of the biggest barriers to entry for new investors because it eats up into a lot of their capital, and they usually hit a point where they feel it doesn't make any more sense to invest because most of their gains are going to commissions. What makes Robinhood even better is that they're rolling out fractional shares right now. So even if you don't have a ton of money to invest, but you want to buy shares of a stock that's over $1,000 per share, you can buy a fraction of that share with Robinhood and still get exposure to that business. But guys, with all this power, of course, comes a lot of responsibility, and you have to be very choosy with the kind of companies and stocks that you invest in. You don't want to just throw a dart at a board and just pick the first stock that it lands on, because that's a surefire way to lose a ton of money. I recently made a video on the 10 stocks Robinhood investors are buying right now, and many of these companies that I covered are far from blue chip companies. Now, a blue chip company is a company that has weathered through the test of time, ideally gone through a few recessions, and has come out stronger every single time. Additionally, a lot of these blue chip companies also pay out a dividend, and not only that, they grow that dividend every single year, showing a ton of strength in their business. Companies like Johnson & Johnson, 3M, and McDonald's are perfect examples of strong blue chip companies that are companies that I would pretty much say are never sell stocks, or stocks you would pretty much hold forever. In fact, guys, I made a video on this topic recently as well, so check that out at the end of this video. All the links will be down in the description down below. Now guys, a lot of companies that are around today, like maybe Shopify or Square, may eventually turn into blue chip companies over the long term. But the problem with companies like that is that they have not proven themselves, at least not to me. They haven't gone through tough times, and they haven't withstood the test of time. Now, they may get through things just fine, they may come out just fine, they may end up being huge winners in the long term, but to hold companies like those, especially as a brand new beginner investor, it holds a lot of risk, and if things don't go your way, it could turn you off from investing forever. That could be one of the biggest mistakes you could ever make in your lifetime. When you're trying to build wealth and grow rich over time, you need to pick companies that are going to be around for the long term. They may have slightly slower growth, they may not give you 10,000% gains, but they are consistent and they keep growing your wealth year over year. So guys, my first rule for this strategy is to invest in blue chip companies. The second rule is invest in great balance sheets. Way too many beginner investors, especially Robinhood investors, just throw their money at a stock without knowing anything about their fundamentals. Let me throw you an example here. So say you're interested in buying a brand new TV. You walk into your local Best Buy and one of your friends says, "Oh, this is the best TV, you should buy this TV." Are you gonna go blindly buy that TV? Probably not. You're probably going to do some research, you're going to look up the specs, you're going to look up some reviews maybe on YouTube, and then after you've done all that and you found, okay, maybe this is a good TV, it is something I want to buy, then what you typically do is look for the best deal. You may look on Amazon, you may look on Best Buy, some other websites, and then try to find the best price. If everything looks too expensive, what you may do is actually wait for a sale, and then once it's on sale, that's when you go buy that TV. Stocks are the exact same. However, the problem is a lot of beginners come onto YouTube, they watch a video, they see someone talking about some, popular penny stock or something, and they just go throw their money blindly at that and hope that they double or triple their money in short order. It doesn't work that way. You're not going to get rich that way. Trust me, you may get lucky a couple of times, but eventually it will come back to bite you. So really the second part of my strategy is to always spend time to understand a business that you're investing in or considering investing in. You want to understand its balance sheet. You want to understand how it operates. You want to understand its risk. You want to understand its competitors. You want to understand its financial position. You want to make sure that the company that you're putting your money into is a good company. If you blindly buy a stock because a YouTuber said to or a YouTuber talked about it, guess who's going to suffer? It's not the YouTuber, because you're going to come back to the video and maybe complain and say, oh, you said it was a good buy, but I bought it and I'm down 10% of my position now. That was such a bad pick. Well, guess what, guys? The only person suffering is you. You made that decision. You put your money in, and now you have to deal with the losses. The YouTuber, no matter who they are, is not going to take responsibility for that. Because if you notice, almost every single YouTuber in the description box says that they are not a financial advisor, and these videos are not financial advice. This includes my videos as well. Now you may be thinking, okay, I'm just going to throw my money into a blue chip company because how could anything ever go wrong in that? Just throw my money in there and over time I'll be fine. Yes, over time you may be fine with a blue chip company. However, not all blue chip companies are created equally. A good example is Boeing. If you guys know my history with Boeing, I bought into this company. I did understand the fundamentals. However, there was an event, global issue, that came out of nowhere that really affected this company and exposed it for a lot of issues that it had over the years. And now because of this blue chip giant is down well over 60-70% from its highs. And if you just blindly bought into this stock because a YouTuber did, you would also be down on that position. I did my research on the company. I liked what I saw in the company. However, I couldn't have foreseen this global issue really impacting the whole airline industry, which has really caused the stock to crater in the last few weeks. But that being said, I understand this business and I'm comfortable holding it through this downturn. However, if you were a new investor, did no research on the company and just bought it because it was blue chip, you would most likely have panic sold when the stock was, say, under $100 per share. So really, the second part of the strategy is to spend the time to understand the business, because it's going to help you sleep better at night. It's going to help you make better investment decisions, and you're going to find out which companies are truly worth your money. The third main part of this strategy is to buy and hold. Don't chase stocks. Now you may think this is the easiest part of the strategy, but I would actually venture to say this is the most difficult part for any investor, including experienced investors. Buying and holding is a very simple concept. You just buy into a stock at a good price and just hold it. However, when things start to go south, you may question your investment and you may actually end up selling off. Or maybe when things start to go well in the short term, you may question your investment again and say, you know what, I'm up 5%, 10% of this position, I'm going to sell. The buying part is typically easy. However, that holding part and the patience is where a lot of investors fail. One thing I've learned with investing is that time can either be your biggest enemy or your best friend. If you're focused on the short term, it could be your biggest enemy. However, if you are focused on the long term, time can be your best friend. Over the long term, the stock market only goes in one direction, and that has proven true over the last 100 years. So why bet against it? When you find a business that you believe is a strong blue chip company, is undervalued and trading at incredibly low prices, the only thing that should be going through your mind is buy. Buy as much as you can, of course, depending on your risk tolerance, and accumulate as many shares as possible. Once you're happy with the position that you've built, you've put enough money into it and you're content with that, then all you have to do from that point on, guys, is just hold and let time do the rest. Don't chase these stocks, don't FOMO, just find great blue chip businesses, buy and hold, and enjoy the gains. Now, the one thing you need to remember is that the longer you hold these strong companies, the higher likeliness you have to actually get rich over the long term. So let's look at a company here that many of us know, Microsoft. Back in 2008, during the last recession, Microsoft stock, which was a stable blue chip company even back then, was trading in the range of $15 to $35 per share. Now, if you did your research on the company, you looked into the company and you kind of figured out, okay, this is what the company does, these are their moats, their cash, their debt, all that kind of fun stuff, you would have a very good understanding of whether Microsoft would be worth an investment or not. Now, say after you did your research, you decided to buy Microsoft stock and you dollar cost average into this company and ended up buying, say, even $1,000 worth of the stock at around $25 per share. Now, at this point, what would most beginner investors do? As soon as they see the stock go up to maybe $30 or $40 per share, they will look at their gains and say, okay, I'm selling out of the stock. I made huge profits on the stock. I'm out. However, the smart investor would not do this. They would stick to their strategy of letting time work in their favor, and they would continue to hold Microsoft stock as long as the fundamentals stayed strong. You evaluate this business on a quarterly basis whenever they release earnings, and you follow the company closely. And if things change on a fundamental level, then maybe it's time to sell. However, if things get better or don't change, then it typically makes sense to continue holding the stock. Well, in Microsoft's case, if you kept holding, your $1,000 would have turned into roughly $8,000, which is a massive return just for being patient and letting time work for you. Now, not all stocks will have massive returns like this, but strong blue chip companies will come out of recession stronger, and investors typically do get rewarded handsomely over time with these businesses. So that's the third and final part of the strategy: buy and hold. Don't panic sell. Don't FOMO, don't let any emotions play a role. Stick to that strategy of letting time work for you, and you will be rewarded over time. So I know right now, when we're going through this market crash, that a lot of businesses like Delta Airlines or Carnival Cruise stock or NAT stock may look like very tempting companies to own. However, if you look at their fundamentals, a lot of these businesses are not that strong financially. The problem, however, is that a lot of beginner investors will blindly buy into these stocks because they're cheap and hope to double their money in the short term with these stocks. And more often than not, they will end up losing on these positions. Carnival is a perfect example. The stock was at $50 per share just a couple months ago. Investors bought it at maybe $20 or $10 per share, and they're thinking it's going to go back to $50 in the next few weeks or next few months. Highly unlikely. And that's because the fundamentals don't actually support that and are actually quite poor for this stock, at least for now. These businesses carry high risk, high volatility, and typically lead to high losses. And instead of wasting your time on businesses like those, if you just took the time to focus on premium blue chip companies, I'm talking companies like Johnson & Johnson, Microsoft, Apple, McDonald's, there's tons of blue chip companies to pick from that are strong businesses. You just focus your time on that and build out your positions in those companies, you will most likely come out on top over the long term, and you will get rich on Robinhood by owning these kind of stocks. So guys, I'm open for discussion. Let me know in the comment section down below whether you agree or disagree with me. This is kind of the strategy that I follow. And if you look at the market right now, you'll notice that the companies that are premium are actually trading at very high valuations. And that's because a lot of experienced and professional investors are flocking to these very premium brands to hold their money in. They're not going to risk their capital by investing in Delta or Carnival because those businesses are fundamentally struggling right now, and they need to really prove themselves for larger investors to really put their money into those stocks. Guys, I hope you learned something from this video, and if you did, just drop a like down below to show your support. But either way, thank you so much for watching. Don't forget to invest positively, and I'll see you in the next one. Peace.